Well, the Dow Gold ratio, if you go back like over 100 years and into the 1920s, when there was the stock market bubble that burst in 29, that ratio topped back then around 20, and then it dropped to 2, I think. And then it took another 32 years for it to go up again. In 1966, 67, it went up to 26, and then it dropped to 1 in 1980, and then it rose again to like the mid 40s by the end of 1999. And the reason why I say the reset has been ongoing since then is because what the Dow Gold ratio reveals, in my opinion, is the preference for gold or real money versus paper assets. And that's what it really implies. The fact that it's been going down since then, of course it hasn't been going down in a straight line, says that more and more confidence is being lost in financialization and paper assets. And the gold is the premier, let's say, indicator of hard assets and real things. So that's what I think it's implying. And I think, a reset is a correction. So if we price stock market in terms of the Dow, even the S&P in gold since the beginning of the century, they've actually been losing real value. And I think they're going to continue to do so. And unlike, let's say, an overnight reset, which happens when governments and central banks adopt a policy, let's say, over a weekend, the reset I'm talking about is more gradual, of course. And a lot of people have lost out, in my opinion, because they've been in paper assets, and I'm not saying they haven't done well, but I think being in gold is very safe, and it's done a really good job since 1999. Yeah, I think, well, in 1980, it went down to 1. It went down to 2 in 1932, 33. So it could very easily go down 1 to 1, or it could even go half. You only need half an ounce of gold to get a full Dow. I have a feeling it's going to be at a lot higher prices, both for gold and the Dow, because I see a hyperinflation and a melt up in the stock market, and gold is going to follow, and it's going to outperform. But it's difficult to say at what prices they would cross. It could be 50,000 each, so it would be 1 to 1, or it could be gold. We could see, let's say, a melt up continue, gold doesn't catch up with the Dow, and then you see a collapse, let's say, in the stock market. But gold stays pretty steady, let's say at 10, 15,000, but then the Dow drops to 15,000 as well. Or, there's all kinds of repercussions. But one thing that I think the Dow Gold ratio indicates is that when it's near 1, that means that it's probably a good time to get back into financial assets, actually. So, not saying you should get out of all your gold, because gold, in my opinion, and silver to some extent, they're all like saving instruments. The price of gold, I think you measure a lot of things in gold. You measure the stock market, you measure the price of oil, you measure even real estate. Here in the UK, the average house price was you needed over 600 ounces in 2004. Now it's just over 100. The other indicators, I guess, is the how young the younger generation, they've been having they have a really tough time, not just in Europe, even the US, getting on, like, building families, buying their own property to live in. A lot more younger people are in their 20s and 30s still living with their parents. It's really, really tough. And also, like here in the UK, for example, we have a lot of food banks, which is where people go to get like free food from charity. And even people who are working go to food banks. And that's something that was unheard of 20, 25 years ago. So there's a lot of small anecdotal evidence. Not small, but there is anecdotal evidence that things are not great. The other one I would say is the political unhappiness and uncertainty and volatility in politics. You have to admit, politics now in Europe and in the US is a lot more divided, and I think that's a symptom of that too, because a lot of people are unhappy with what's going on, and they're blaming the people in power. I mean, yeah, the U.S. Treasury officially has 8,133 metric tons of gold, and the Federal Reserve has gold certificates that are claimed to that gold. And the reason that happened was back in 1933 when Roosevelt, when he took in all the gold. He made gold illegal, and people had to hand in their gold and take Federal Reserve notes for it. All the gold came through the Fed regional banks, and then the Fed regional banks gave the gold to the Treasury, and the Treasury issued these gold certificates. And that was at $20.67. And then in 1934, they came out with the Gold Reserve Act in January 30th, I think, 1934. And that day they revalued gold to $35. And the Fed sent the profit to the Treasury because the gold was taken in at $20.67. And the revaluation, they sent the profit to the account of the Treasury, and they kept those certificates. And then in 1972, after Nixon closed the gold window, the Congress revalued that price from 35 to 38 because, the international price of gold was going up, and it didn't make sense to have the price at 35. They revalued it again in 73 at 42.22. And by then, gold was almost at 100. So they're always late, but they haven't revalued it since then. So all that gold and the certificates at the Federal Reserve are worth about $11 billion. So if they revalued the gold certificates to, let's say, $3,400, that would be about $800 billion in profit for the Treasury, and they would have to write new certificates for the Fed at $3,400, and the Fed would send the profit to the Treasury, and they could use that to do whatever they want to. So if you revalue it to 15,000, I mean, that's a much bigger number. I think Clive came up, I don't know how much it was, so that's about four times, so it's about 4 trillion. If you do it to 30,000, that's 8 trillion. So they could choose any number, but the thing is about revaluing, and we saw the other day, Alexei, that even the Federal Reserve Board now, on August 1st, they published an article about how this process works, and they'd never done that before. So are they preparing to do a revaluation? I don't know, it's just speculation, but if they revalued it to the market price right now, let's say 3,400, yes, they'd have an extra 800 billion, the Treasury. That would help them. But what it would do, it would put a floor under the gold price, because back in 73, when they revalued it to 42.22. We never saw that price again. And by 1980, the price of gold had gone up to like almost 900. So it would be, even if they revalued it to 3,000, for example, it would be very bullish. They might want to do it a little more than the current market price, maybe because they might want more profits for the treasury. They might just let the market keep going higher, and then maybe in 6 months to a year announce it, let's say at 4,500. Or they could announce it over the weekend at 10,000, and that would basically close down the gold and silver market probably for a week, because things would just go crazy. I don't know what would happen, and that's why I tell people it's better to be early than one day late, and that's why I say you need a little bit of physical gold and silver.